Welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be taking a look at Bitcoin on the daily. But before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please trade at your own risk. Now look, we're doing something a little different today. What I have here is the daily Bitcoin chart on Bitstamp, and it's completely naked. And what I want to do is I want to basically just go through it together and let people see where some of these trend lines come from, patterns, etc. And hopefully we can we can kind of discover what's to come in the future, what this breakout's going to look like, and what we can expect from it. So I'm gonna start down here with the obvious area. Basically, we're just going to look for essentially this trend line that comes from down here and basically supported price the whole way up on the bull run, and that's like our initial parabola line. And essentially what it's going to do is just form support all through here and then ride up. And then when we were above this, we were clearly in the bull market going up, and then as we revert to this mean line, we come down and eventually we end up too far below it, so we sell back up and we're going to come and get back even with it. So look at this as like the average, essentially. Like we average out on top here, we're going to pull back towards it. We average out here, we're going to pull back towards it. So the further we get away from it, the more likely we are to go towards it. So just with that line alone, you would think then that what's likely to happen next is as we approach it, the further we get away from it, the more likely we are to go towards it. So that would give us essentially, a bullish view on it. And then now I just want to go through a couple of these so we can kind of see it together. But now look, that's our second parabola line. So now we have the green line, now we have the yellow line. So you see as the slope intensifies, that line is formed. And then finally we have the last parabola line that goes through here, and that one's going to be our red one, and that's the blow off top essentially. But what you're going to see is as we go through, this line is support, and then we break away and the slope increases. This line now becomes our support, and then we break away and the slope increases, and this line becomes our support. And then when we finally break through here, it's going to come back up and test it for resistance. And when the resistance fails, you'll see we dump back down. And then we actually make it back through the next parabola line. We come down, test it, bounce up, come back. It fails, come back, retest it as resistance now. And now you'll see that as we do this, we come through here and it actually calls our peaks ahead of time. So when this one right here failed, we came down below it, we know at some point in time we're going to come back and touch it. Okay, so once we've touched it, we fulfilled essentially that algorithm. We check that that is now resistance, which it is. It was support. It's now officially resistance. So now we can potentially go to lower prices. That's not necessarily going to happen, but it could. Now what I want to do is I want to draw another line from our low here to our low here. And that one's essentially like the bottoming formation line. You could do it this way, whichever way it looks like it matches up, because when it matches up with price action, that means you have it drawn correctly. Okay? So we have our basic parabolas now in place, support and everything. So at this point in time, once we had fell through this green line here and we came back and we tested it as resistance, it's likely that what's going to happen next is we're going to come back to this blue line and possibly even fall through that and then come through and test that as resistance. But more than likely we're going to come down here and test it as support. So what that's going to do is that's going to give us a target. It's not necessarily the target, but it's going to give us a target. So I think it's likely that somewhere in this range we're going to come back here and we're going to test support. So that gives us an initial target based on just this and where the price action's at right now. We could just creep sideways forever, and then by 2020 June we would touch it, and that could be our test of support too. That is a possibility. But now let's go back here now, and now we're going to do a couple things with some triangles. Alright, and what I want to do is, man, which way do I want to do this? Do I want to do it with the actual tool? Yeah. My bad. No, I was thinking if I want to use the actual triangle tool, but I don't. I want to use trend lines to do this. Okay, because what I'm going to do is put a couple in here. There's one for the top, one for the second point of the top, one for the bottom, and then one for that main support line that we have for a long time. Make that one a little bit bolder. Alright, and now you'll see what's happened here is, actually I'm going to go ahead and do these ones as well. That was our main resistance line that we were caught under before we finally broke out. And then this is our bottom of the triangle. This has been holding us up so far. So now we have a couple trend lines in here. And the importance of trend lines like this, like horizontal trend lines, is they're much less subjective. Because over time, a diagonal line could be drawn just a little bit off. Like this could be drawn just like that. And it can make thousands of dollars difference in the price. So it's very important that you essentially, one, that you spend the time and correctly put these lines in here, but two, when you use horizontals, you give much more of a specific target because everybody's looking at it essentially the same way. Now if you change to like a daily versus a 4 hour, you might draw them in a little different spots. You cut out some of the wicks, but usually the longer the time frame, the candle close is going to give you more specific, more accurate targets. Alright, so now we're going to go ahead and form our triangles here. And so look, when this was first coming down, people would take the second peak right there, and then that's where they're going to draw the triangle to, is that second point. And you'll notice that when you do that, change that one purple, you'll notice when you do that we couldn't break above that, and then couldn't break above it, and then we finally did break above it, and then once this rally fails, we come back and we use it as support. So it was resistance, and then it becomes support when we break above it, okay? And now we're going to take from this point here, okay? And now you'll see what I did is I took from the point right here to this point here, and you'll see again, that becomes our resistance. So now we have a triangle that's formed out of this, okay? And the resistance is the top and the support is the bottom. And the more time we keep coming and testing that flat line support, the more likely it is to break. As where the resistance is subjective, it's getting lower and lower. So we're putting a lower high, same low, lower high, same low, lower high, same low. And then eventually we get to this point right here, our capitulation point. And that's when you see our dump, okay? And then we come back down, find support on that heart line that we had. It's coming up, the final parabola support line. And that was it. That was the last chance we had on this support line. So the likelihood of us breaking at this point right here is very likely because we're essentially coming to the end of a pattern. So we have to either break up, continue sideways and invalidate the pattern, or dump out of it. But sometimes you don't see the whole pattern at once. And that's why it's important to actually pay attention to what's happening and see, could I be looking at this wrong? Am I looking at this wrong? Is there another way I could be seeing it more accurately? Etc. So, alright, so now once we had our capitulation, we dumped down here. We essentially form another triangle based off of that top resistance line we couldn't buy through. Essentially that was like a sell wall. So every time we come up to it, we sell off, come back down, people are reaccumulating, sell off, come back down, people are reaccumulating, sell off, come back down. And then you see we started consolidating at this line here for a little bit. And we didn't get that same strong rejection we had gotten in the past. And that's when you knew we were getting ready to break out. And we did consolidate, breakout, consolidate, breakout. And now here we are at this position where people were saying for some time that this was a symmetrical triangle. People were drawing it like this. And that's what they were seeing. Oh, it's a symmetrical triangle. It could break either direction. But we've been saying the whole time it's not a symmetrical triangle. People were looking at it completely wrong because we had a fib level support that was essentially a horizontal support. And that's why it's so important, these horizontal supports, is because they're not subjective in the same way as a lot of these other things are. Okay, so everybody's going to be looking at this the same way. So when you take from your full-on bottom down here to your full-on top over here, okay, now we have the blue fibs, and you'll see specific interaction at the 382 and around the 0.5 and at the 618, and then look right here at the 786. That was the line we couldn't break above. Alright, so now you're starting to see these support lines are actually from something. People aren't just drawing them here. It's specific targets from our Fibonacci extensions. So now I'm going to turn this one orange. And now the orange one is from the top of the rally to the bottom of the rally that already finished. And again, you'll see we're finding support now on that 382 is what was forming that support line. Okay, same with the 0.5, it was forming our support line. and that's where we were getting that at. And again, you'll see with our resistance when we came back up, the 382 is what stopped us. So essentially you'll see just the different Fibonacci levels interacting. And now we're going to draw one more before it starts getting too crazy over here. And then this one is going to go from the bottom of this rally to the top of this rally. And I'm going to go ahead and turn that one green. And now again, you'll see all these lines corresponding, all these zones. And this has essentially been our trading zone here between the 382 and the 0.5. And we've basically just been bouncing around inside of these. So now we have a ton of these horizontal supports. We've got some strong resistances. We can essentially get an idea of where we expect our target is. So if we're going to go by the diagonals, we're either going to come back towards this median line at some point in time, continue to go sideways, or dump down. So yeah, we're either going to go up, sideways, or down. Wow, that really tells us a lot. Okay, but now this horizontal or this diagonal line though, remember that's our support line we keep coming back to, and that one has a high likelihood that will in fact, when we failed to break back above this, we broke down below it. That was our attempt to get back above it. We failed to get back above it. So now we're most likely going to test this line again. And if this breaks, remember what's going to happen. We're going to go down below it. We're going to find support at our next level, and then we're going to come back up and test it. And what's happening? We get a high. We get a low. We get a lower high. We're going to get a higher low. So what that's going to essentially do now is, see, people think so short-sighted with stuff, and they look at one thing and they think, oh, that's it, that's the pattern. But what is really happening is this resistance line right here is extremely powerful, because that was our high, that was our high, in the same way that this is our low, that was our low. So now we're actually pinched inside a massive symmetrical triangle. And this symmetrical triangle, this gives us an idea of what's really going to happen long term. What is likely to happen right now. Because what happened here, we peaked out, we came back down. That's a bull run. We're in a bull trend, and this is a reversal pattern. Okay, this is a reversal pattern. A descending triangle is a reversal pattern. There's a price, purchase orders, holding up the price while people can unload their positions, and then finally when they've unloaded enough, it can go to the actual price it needs to go to. And then look, there's a sell wall here. So every time price gets back up to it, there's massive amounts of sells, so people can reaccumulate without the price just jumping back up. And once that's done, we jump up, reaccumulate, jump up, reaccumulate, jump up. And now look, we're at the top of, again, a bull rally, just like this. So what's happened? We formed this triangle. We formed this descending triangle. And what's eventually going to happen is, and probably the next time we come down to test this, because the triangle is almost full, we're going to come down here and we're going to break out the bottom. And when we break out the bottom, our next target is going to be the 0.5, because we never actually made it to the 0.5. So once we make it to the 0.5 right here, then we can essentially choose that as a potential reversal point. If not, it could be down here with the 618 confluence and our 236 of the pattern reversal. So this right here is a very high likelihood target area. And what is that coming in line with? Our diagonal as well. So that gives us, and then also this consolidation on the way up. So what I think we can essentially do is we can get a pretty good idea that we're not going to come back down to this baseline here, at least not right away, that we're going to come down to this point, and then we're going to get front run. We're either going to get to the 618 and then get a bounce off that, make it to 0.5 and get a bounce off that, but the likelihood of breaking through this for any amount of time is very unlikely, because that's been our solid support this whole way up, is from the bottom to the bottom. So that gives us a very strong support line, the same way that some of these others, this was a very strong resistance line. Once we broke under it, it's very hard to get above it. So now here we are consolidating again. So if we get that breakout back down here and we come down and we touch the bottom of this, that's going to give us another point of confluence on this triangle we've been forming. So now we have 1, 2 on the top, and then on the bottom we have 1. I count this as 1, all that together. So when we get this down here, that's going to give us our second one. And then at that point in time, we'll have 2 and 2. If we come back up, touch the top right here, and we see any kind of confluence with it, we know that we've just been filling out this massive, massive, massive pattern. And this is not bullish or bearish, but if you look at this chart over time, it's very clear that the asset is bullish. So eventually it's going to break back to the upside. I mean, unless it dies, it gets hacked, something crazy happens, it's going to break to the upside. Excuse me. So here we have it. We formed this